Welcome. Thank you for joining us today at a Nelson, Levine, DeLuca, and Hamilton webinar on the Federal Insurance Office report on regulatory modernization, which was released yesterday. I am Larry Morrell, a partner at Nelson Levine, and I'm joined today by two of my colleagues, Sue Stead and Maureen Adolph. In the next 15 minutes, we will give you a brief overview of the report. We are still studying the report and will have a more in-depth analysis at a future date. I will spend the first few minutes giving you the background and approach of the report. Then Sue will walk you through some of its key recommendations. Finally, Maureen will provide some concluding observations. Title V of the Dodd-Frank Act required the FIO director to conduct a study and submit a report to Congress on how to modernize and improve the system of insurance regulation in the United States. That is what this report is. Sifting through the many proposals for streamlining and improving the way insurance is regulated in the United States and thinking through the problems with the current system, the director has come up with a modest list of suggestions. There are no bombshells. Instead, there is a careful weighing of the strengths and weaknesses of the present system of insurance regulation in the United States and some thoughtful proposals for how to improve that system. The report does not propose scrapping the state-based system of regulation, having the federal government take over regulating the business of insurance, or even fundamentally shifting the balance of authority between the federal government and the states. Instead, the report suggests a sharing of the regulatory burden, with the federal government being helpful to the state-based system where it can, and playing an enhanced role in some areas, such as international agreements, where it has specific responsibilities and expertise. This is not a declaration of regulatory warfare. It is a proposal for cooperative efforts between state and federal regulators to improve a system that has served the country well but needs to be improved, not least because of the increasingly global nature of the business of insurance. Even though the report is moderate in its recommendations, and even though any significant changes in the system will require congressional action, as the report notes, it is nevertheless a significant document that will have a long-term impact on the regulation of insurance. It makes a case for an enhanced role for the federal government in a field that until recently was reserved exclusively for the states. Sue Stead will now provide an overview of those recommendations. Sue?
Thank you, Larry. There will be enhanced federal involvement, particularly by the FIO. Some of the key takeaways is that the FIO found a lot of issues with the lack of uniformity in current regulation. You will see in the report over and over again there's a lack of uniformity. There's also a strong push for states to make significant changes in how they regulate currently, as well as in making changes to their laws and their processes. The point is also made that state insurance regulation needs to align itself with international standards that are being developed. There are many, many sections of the report where states are encouraged to make changes, and the sections end by saying the FIO will monitor the state's reform efforts. There are some issues in which FIO will have some direct role, and there are several areas where, if the states don't act, FIO has said that perhaps federal standards will be necessary for some industry practices and lines of business and for regulation. There are a couple of places where FIO points out to the potential for regulatory arbitrage and says those opportunities should be eliminated, and that includes in product approval processes. There are also comments about the state resources, particularly for ORSA and PBR, and while those two initiatives may be good, they require state resources and technical expertise that the FIO does not seem to think states have. Some of the specific recommendations include really all areas of state regulation, everything from licensing to products and what the NAIC does. One of the recommendations is that the NAIC accreditation program should have a third-party independent review and audit. The suggestion was that the states rely on the NAIC for advice in whether to adopt models and what to do, and therefore the NAIC, while they're the ones that determine accreditation, perhaps there should be some independence in that process. There are regulatory standards for captives, particularly dealing with the transparency of the financial information. Producer licensing was shown to be still not uniform despite the passage of Gramm-Leach-Bliley and the Producer Licensing Model Act, and the passage of NARAB is encouraged. There is also a section on surplus lines tax collection and the efforts or potentially lack of efforts or coordination of efforts on the states. The FIO came out on principle-based reserving and suggested states move slowly. This is one area where they were not perhaps as objective as they have been in other areas, as the New York position was mentioned and spoken about favorably in the report. On product approval standards, the FIO would like to see all states, including the big states who are not currently members, become members of the Interstate Compact. There was also a suggestion that there should be something similar for commercial lines. In addition, they want to avoid arbitrage in product approval by not allowing the industry to file products outside of the compact standards. The report even gets into rate regulation and suggests the states should be looking at the different ways of approving rates in order to promote competition. There is a suggestion that some risk classifications might be subject to federal standards. They get into as much detail as the payouts in a liquidation, suggesting that people who buy the same product in different states should receive the same benefit, or there should be the same cap on benefits under guarantee funds. The FIO has recommended that all states adopt the current suitability model and suggested if that does not happen, perhaps federal standards would be necessary. Not surprisingly, in market conduct exam and in market analysis functions, they are pushing for increased coordination, and they have suggested that all states should follow the handbook standards. With respect to some discretionary practices and permitted practices, the FIO took issue with the variations in regulation that result from those discretionary decisions and suggested that the domestic state should be getting the approval of other regulators in order to make those discretionary decisions. In other words, perhaps there will not be the same level of domestic deference if the FIO has its way. The FIO also pointed out that there is no model law for suitability or fitness for officers and directors. They suggested that receivership standards, particularly with respect to reporting, are not uniform, and they should be. Group supervision received a lot of attention as well, and the importance of it was noted by the FIO. The FIO also suggested that the FIO should be involved in supervisory colleges and suggested that the information that would be available through those colleges would be highly significant for the FIO's statutory role as a financial stability monitor for the insurance industry. Throughout the report, you will see suggestions that if the states do not make the necessary reforms, that perhaps federal standards should be imposed. This was mentioned with respect to a lot of different things, including the regulation of mortgage guarantee insurers. This is in large part because of the role that part of the industry plays in housing finance, and as we move on with the economic recovery, FIO thought that would be important. I mentioned risk classification standards. There was a reference to federal standards suggesting that some classifications might be contrary to federal law. And with respect to the surplus lines, premium tax allocation under the NRRA, the FIO noted that despite the state's efforts, they've not been able to come up with uniform standards or do anything by agreement, and again suggested that perhaps federal intervention would be necessary. So where do they want to become directly involved? The suggestion was that for federal insurance, for mortgage insurance, there should be federal standards for mortgage insurance and the oversight of that part of the industry. The FIO has suggested that the Treasury Secretary and the United States Trade Representative should enter in negotiations for a covered agreement under Dodd-Frank for reinsurance collateral requirements for foreign reinsurers. And as I mentioned, The FIO thinks it should have a role in supervisory colleges, in part because of their duty to monitor financial stability and their duty to identify gaps in regulation for both large national companies as well as internationally active companies. The FIO intends to monitor the implementation of NAREB 2 should it be passed by Congress. In a few places, I mentioned they get right into the heart of state regulation, and in this respect, they're talking about developing personal automobile policies for U.S. military personnel so that those individuals do not have to obtain a new policy when they're transferred to different bases in different states. And finally, there was a suggestion that they will deal with the tribal leaders to look at the affordability and accessibility of insurance for Native Americans. One area where they did not make any recommendations was with respect to national catastrophes, and the FIO discussed the state efforts to deal with that problem, suggested that those should be allowed to mature a little bit before any national standards are there. However, we can expect to hear more from the FIO on national catastrophes when the report is issued that's required under the Biggert-Waters National Flood Insurance Reform Act. So those are some of the highlights and recommendations in the report. And now I will turn it over to Maureen for some additional comments and observations.
Thank you, Sue. Well, what you've heard here today is that the insurance industry, to borrow a phrase from the financial crisis, is facing its own new normal, because it's clear, based upon our early read of the FIO Modernization report, that the industry will continue to operate in an environment where there is no regulatory certainty. The landscape will continue to be a difficult one to navigate, with state, federal, and international regulators working both cooperatively and at cross purposes to rationalize the future regulation of the insurance industry. Overall, the report is fairly even-handed. It emphasizes the need for updates to state regulation, which the industry has advocated for some time. Things like a better system of agent licensing, market conduct reform, reform of the product approval process by getting all states into the interstate compact, equal guarantee fund benefits, and netting. These would promote uniformity and efficiency and are necessary as the insurance sector continues to evolve. However, despite the fact that the report has a state regulatory sensibility to it, encouraging the NAIC to continue to improve in areas where it's made progress, a couple of recommendations are more aggressive. One of those is the recommendation on federal oversight of mortgage insurers. On the other hand, since mortgage insurance ties squarely into the federal housing programs, it perhaps is not so surprising. Nor are FIO's efforts to more aggressively represent the domestic industry internationally on such matters as reinsurance collateral. The report also makes recommendations to ensure that the U.S. continues to maintain effective insurance solvency regulation. However, since this is a central tenet of state regulation, the recommendations concerning PBR and captives are likely to further complicate discussion of these issues among state regulators and at the NAIC. I would anticipate that this report will give anti-captive, anti-PBR state regulators an enhanced voice in that forum. As the insurance industry continues to fight to be understood on the federal level, state regulators and legislators can be expected to continue to defend and improve the state-based regulatory framework. The FIO report supports improvements to insurance regulation and embraces its mandate to continue to monitor progress. Both of these things should work to enhance consistency in regulation and support the industry's global competitiveness.
Thanks, Maureen, and thanks to all of you who have come listen in to us today. And we will be in touch with you, I'm sure, further about this important new report. Thanks, and we're signing off. Take care. Bye.